Hi, I'm Edward. Welcome to the channel. Have you ever wondered why Warren Buffett seems to hate cryptocurrency so much and hate Bitcoin in particular? Well, I looked into it a little bit, and if you understand the history of money and you understand something about Tulip Mania, I think it explains the story very well. So if you'd like to learn more, stay tuned. Okay, let's start with the history of money. Nobody knows how money was actually invented. It's probably was invented many times around the world, probably many times, but it's lost in history. It's been around for so long. But we have some clues as to how money might have started. And probably it happened with a trade and barter system after we started settling down and living together in villages. Probably we started to trade products back and forth. Now, what would happen if I wanted to trade for a particular product from you, but you didn't have that product at that moment? What would we do? So for example, let's say I wanted to trade a goat for some fresh vegetables. It's wintertime. You want the goat, but you don't have the vegetables yet. What would you do? Well, you might give me some sort of token that represents the vegetables that you owe me and say, hey, don't worry, bring this token back. It'll be a reminder for me. Next spring, I'll plant extra vegetables and I'll pay you back for the goat that I'm taking right now. So that token could be anything. So what's really interesting about the history of money is we've seen all sorts of things used as tokens of storing value in the past. So for instance, one interesting quote that Warren Buffett made fairly recently is he said, Bitcoin is something like seashells or something. Well, interestingly enough, it's very ironic that he said that because seashells have been used all over the world, in Asia, in Africa, in North America. They've been used as a store of value for absolutely centuries. In fact, I just recently found out that seashells are still being used as a store of value occasionally in the Solomon Islands. So who knew? So anyway, it made me start to think, why is Warren Buffett talking about seashells and comparing Bitcoin to seashells? Clearly, Warren Buffett knows that seashells were used as money at one time. So why would he think that that's somehow comparing Bitcoin and seashells make Bitcoin seem illegitimate? I think there's a secret here. I think there's a point to his thinking that we have to understand. So, first of all, what you have to understand about Warren Buffett is he hates the idea of just storing your money in something. So he's never been a big believer in gold, for example. He's always thought that gold is kind of a waste. Why? You have to understand that he sees a store of value as very different than a money-making asset. Warren Buffett considers businesses that produces something, create a service, offer something to the public. These are what he considers assets. Now, of course, gold is its own asset class, but it's not a money-making asset. It basically just sits there. It only makes money if somebody is willing to buy more of it. And I think this is the problem that Warren Buffett has with cryptocurrency. The only way that you really can make more money is if somebody is willing to pay more for your Bitcoin than you paid for it. So, of course, we don't know what's going to happen with the price of Bitcoin and various other cryptocurrencies. They could go up a lot. But I think we want to be very careful about buying when we buy these cryptocurrencies because they're not actually making anything. They're not businesses. There's no real reason for the price to go up except somebody else wants to pay more for it. So let me give you a story from history that I think is quite interesting. Back in the 1600s, this was considered the Dutch Golden Age, and the Dutch at this time were traveling around the world. They were great traders. They were traveling all over Asia and Eastern Europe. They were very famous for trading with the Japanese, and at one point had a monopoly in Japan. So they were trading silk and they were trading spice all around Europe, bringing it from Asia, making a ton of money. So this is the age of the Dutch East Indian Company. So I'll put a link down below in the description. You can learn more about the Dutch East Indian Trading Company, which is a very famous company at the time, and in fact was the first multinational corporation. So the Dutch were very famous for trading these exotic products from Asia, but they were also very famous for trading more mundane products from Eastern Europe, like wood and grain and so on, and they were stockpiling a lot of it. So when other countries ran out of food or had some sort of a crop failure, the Dutch often would come to their rescue and make a ton of money at it at the same time. So the Dutch at this time in the Dutch Golden Age were making tons and tons of cash. So where do we store the cash? Well, a few, maybe 100 years or 150 years, I forget now, tulips had been first imported into Holland from Turkey. And these tulips, right from the beginning, were quite valued by the Dutch because of the vibrant colors of the flowers and so on. And, people just loved them. They were new. Originally, these bulbs, these tulip bulbs, were only handled by professional flower traders, and only they would purchase from each other. But suddenly, because of all the extra cash washing around, because of all this trade that the Dutch were doing, money started flowing into these tulips, these tulip bulbs. And actually regular people, average investors, were starting to buy these bulbs. And the idea was, hey, if I buy these bulbs, maybe somebody was willing to pay more for them later, and the price will go up. And the price really did go up. In fact, at the peak, some bulbs were selling for many years of an average laborer's full yearly salary. So they got to astronomical prices, and there was no good reason, because it's not a profit-making asset. It was just a store of value, like a seashell. So suddenly, eventually, somebody realized, or a number of people realized, hey, these prices are insane. These are tulip bulbs. What are we doing? And the price suddenly collapsed. Now, it did nothing to the economy per se. The Dutch Golden Age continued for many, many more years after this first bubble. And by the way, this Tulip Mania bubble is considered the first bubble, the first financial bubble. And in the end, a lot of people lost a lot of money. A lot of people were financially ruined. So what can we learn about this? I think the reason Warren Buffett hates Bitcoin so much is he sees two problems. It's only a store of value, which he doesn't love in the first place. He thinks it's a waste to leave your money in a store of value. Number two, he sees the risk from history that if prices do get, say, let's look at Bitcoin. I see all over the place people saying it's going to get to 100,000 or 1 million. At a certain point, you're going to have to ask yourself, gee, Bitcoin's at 100 grand. Why is it at this price, and why would it go any higher? 1 million. What if it got to 1 million? Why would it maintain that price? And we have to be logical about it. The only reason it would ever attain 100,000 or more, and I'm not saying it won't, it could. The only reason it would is more and more people think that somebody else in the future will buy it from them for a higher price. So, my suggestion is go ahead and buy Bitcoin, or go ahead and buy whatever cryptocurrency you want to invest in. I do support it. I think as an asset class, it makes sense to have it as a percentage of your overall asset investment plan. But that's the key. Have a plan. Know what you're going to do with it. Know what your exit price is. Make sure you're not buying in too high. I think you should sit back. Don't get so excited about the price. Let's see what happens. Stocks, everything, every asset class goes up and down. And if you buy it at the wrong time, you could be in a serious problem. For example, I'm going to put in a link down below about the 100-year price of gold. Now that graph that I'm going to add, it's adjusted for inflation, so keep that in mind. But if you take a look at the last two peaks of gold, there was a 30-year gap. If you bought in the 1980s at the last peak of gold, or the second last peak of gold, it took you 30 years to get your money back. So what I'm saying is, maybe Bitcoin's a good price right now. I don't know. But at 100,000, should you be a buyer? I'm not so sure. I would be waiting for a sharp correction in price before I purchased any more cryptocurrency at this point. If you already own it, hey, no problem. But if you're new to it and you're just buying cryptocurrency for the first time, I would highly suggest you be patient and wait for a sharp correction in price before you make any purchases. Number two, I think you absolutely have to have a plan. Are you going to be trading in and out of this security? I'm going to be making another trading video very shortly, talking about how you can actually profit from the volatility of cryptocurrency. But should you be a buy and hold person at a very high price, or should you trade in and out of it? I think you should probably trade in and out of it just like you would gold or some other asset that's not a money-making asset. Okay, so I have 3 tips for you when you're thinking about buying cryptocurrency at this point. Remember, it's not an it's not a money-making asset, so keep that in mind. So make sure you do your homework. My suggestion is, this is not my suggestion. My suggestion is coming from a guy named Jim Cramer. I read his book 100 years ago called Confessions of a Street Addict. And the one line I really remember from that book is, you should be spending 1 hour per week per asset just studying the news, what's going on. So if you're not prepared to put in at least an hour a week studying the news on Bitcoin or whatever cryptocurrency or cryptocurrency in general, my suggestion is don't invest. Get a professional to help you to keep track of what's going on, because prices move very quickly in this market. Number 2, learn from history. Look at that Tulip Mania story. Don't put all of your eggs in one basket. If you're going to buy cryptocurrency, make sure it's part of your overall diversification strategy. I'm not going to tell you what percentage of cryptocurrency should be in your portfolio, but keep it reasonable. Make sure that you don't have everything in cryptocurrency. It should be spread through other stocks and perhaps even bonds, depending on your risk tolerance. And again, if you need help with this, I suggest seeing a financial professional before you make any investment at all. Number 3, this is really important. Don't invest more than you're prepared to lose. What's that number? So obviously it's really easy to get greedy and go, oh my God, cryptocurrency, it's up 20%, it's up 50%, it's up 200%. Let's just dump money into it. It's easy to get greedy. Don't get greedy with this with any investment. Don't get greedy with this kind of investment. What size of investment should you make? I would say take a look at the number on the piece of paper and say to yourself, if I lost 70 or 80% of this money permanently, how would I feel about that? If you can look yourself in the mirror and say, all right, yeah, I lost 80%, it's gone forever, but it was worth the gamble, then that might be an appropriate amount of cryptocurrency. If on the other hand, you look yourself in the mirror and you say, 70, 80% loss of this, it would financially destroy me. Obviously, you have too much. So if you're losing sleep over the amount of cryptocurrency you have, especially if you're going to lose sleep about losing 70 or 80% of your cryptocurrency, you've got too much. I would suggest lightening the amount of cryptocurrency you have in your portfolio. So I hope these stories helped you. I hope that the tips I gave you are useful for you, and I wish you a lot of luck investing in the cryptocurrency market. If you have any questions, leave them in the comments below, and I'll get back to you as soon as I can.